If you're thinking about moving to Washington State, or if you're already in the process of relocating here, I need you to watch this video before you make any decisions. All right, so Washington just went through the biggest tax overhaul in state's history. Capital gains changes, estate tax whiplash, and a brand new income tax, the first in Washington's history, signed into law this year. If you've been researching what it costs to live and own real estate here, the rules just changed. Some of this will affect you directly and some of it won't. There's a lot of fear-driven noise out there right now, especially for people considering relocating to Washington from places like California, Texas, and some other states. So let's break it down clearly, honestly, and with no drama. I'm going to tell you exactly what changed, what it means for real estate buyers and sellers specifically, and what you need to know if you're moving to this market. Here's the thing about Washington state taxes that most people researching a move here don't understand. This state has always been unconventional. No traditional income tax, a real estate excise tax instead of a capital gains tax on property, high sales tax, but relatively moderate property taxes. That framework is still intact, it just got more complex. A year ago, people moving to Washington State from California or New York were walking into a dramatically simpler tax environment. That pitch is still largely true, but there are some new nuances, especially at that high income end. Most people relocating here in the 500K to 3 million home range, the direct impact on the real estate transaction is minimal. But you need to understand the full picture before you commit to a move here. I'm Lianne Hall. I run Lianne Hall Realty with Paramount Real Estate Group, and I specialize in relocation buyers, people moving to Western Washington from out of state, as well as move up sellers and investors from Gig Harbor, Port Orchard, Tacoma, and the broader South Sound. I work with buyers relocating here every week, and this topic is at the top of every single conversation right now. Here's what I'm covering today: the capital gains tax change and what it means if you're selling before or after you move here, the estate tax roller coaster and where it actually landed, and the brand new millionaire tax. Who does it hit and who doesn't it, and what it's actually doing to our market, and what all of this means specifically if you're buying, selling, relocating to Western Washington in 2026. If you're relocating to Washington State, grab my free Washington State relocation guide. It's in the description. It covers the full tax picture, cost of living, neighborhoods, and what to expect when you move here. Let's start with the capital gains, because this is the one that trips up a lot of people who are moving to Washington State from high tax states and assume they're walking into some simple situation. Washington has had a 7% capital gains tax since 2022. It applies to long-term capital gains over roughly $278,000 adjusted annually for inflation. It follows federal definitions with some key exceptions, and those exceptions matter a lot if you're planning to sell a home as part of your relocation. Here's what's changed in 2025, retroactive for gains over 1 million, and now there's an additional 2.9 surtax. So you're at 9.9% on the amount above $1 million. Real money right here. Let me give you a little example. So $2 million in capital gains on your federal return. Washington taxes you on that 1.72 million after the exemption. So your first million, 7%, and that remaining 720K, 9.9%. Your Washington bill is about $141,000. So here's the rate for the capital gains tax in 2025 to 2026. So gains that are up to like 278,000, that's your threshold, are exempt. Once you hit that 278 to 1 million, after that exemption, you're paying 7. And then gains over $1 million after that exemption is 9.9%. So real estate sales moving to Washington or selling here exempt, That bottom row is the most critical line in the entire table, especially if you're relocating to Western Washington and selling a home to fund your move. Real estate sales are explicitly exempt from Washington's capital gains tax. They always have been, and they still are. If you're selling your home and it's your primary resident or an investment property to move here, you are not paying Washington's capital gains tax on that transaction. Where it matters? Well, it matters with my investors with their large stock portfolios. It matters with my tech employees with RSUs. It matters with my business owners doing liquidity events. That's a different conversation, but it is driving behavior to that top of our market, and I'm going to get to that next. The estate tax. It went from the highest rate in the country to something a little bit more manageable. Here's what happened, and here's who it affects for people buying and settling here in Washington State long term. If you're moving to Washington State and you're thinking long term, building wealth, transferring your assets, and planning your estate, this next section is for you. Washington's estate tax has been chaotic for the last 12 months. Here's the quick version. Before 2025, so the exemption, let's say 2.19 million, hadn't moved here since 2018. Max rate was 20%. So Washington already had one of the lowest exemptions in the country, which caught a lot of people relocating here by surprise. They came from states with no estate tax and didn't realize Washington did have one. So July of 2025, two things happened at once. Exemptions jumped to 3 million. That's the first increase in 7 years. It was good news for most families settling here in Washington State long term. At the same time, though, those top marginal people, their rate spiked from 20% to 35%. Those are the people that are like 9 millions. That made Washington officially the highest state estate tax rate in the country. In July of 2026, the legislature walked it back. They started July 1st of 2026 with the max rate reverting back down to 20%. The 3 million exemption stays. Net result, more breathing room for most people who are building equity and wealth here in Western Washington. What this means for people relocating or already living in Western Washington is, if your total estate is under 3 million, you're paying zero in Washington estate tax, period. For people moving to Washington State from California, California also has no estate tax, so this is a new concept. You just need to plan ahead. Now, if you own a home here, let's say your home's 1.5 to 2 million. Think about it, you also have retirement accounts and maybe some other assets. You might be closer to that 3 million threshold than you think. Gig Harbor and the South Sun values have climbed significantly. Now, Washington does not allow spousal portability of this exemption, unlike the federal system. This is one that surprises most couples relocating here. Talk to your estate attorney. Bottom line, the estate tax is more manageable now than it was 6 months ago. But for anybody relocating here with significant assets, especially if your primary wealth is tied up in real estate equity, estate planning is not going to be optional for you. My husband is in wealth management. I know this, as many of his clients are in this situation. I can definitely connect you with the right trusted advisors in our area. All right, coming up next, the big one, the one making national headlines, Washington's first ever income tax. What does it actually say about us? Who's it hitting? And what's it already doing in Western Washington's real estate market? On March 30th of 2026 here, our Governor Ferguson signed Washington's first ever state income tax into law. Now, if you've been following Washington State closely, or if this news made you reconsider relocating here, let me give you the actual facts. Here's exactly what it is: a 9.9 tax on household income over $1 million per year. So if you earn under $1 million, well, you pay zero on this tax. It does not affect the average person moving to Washington State. It doesn't take effect until January 1 of 2028. First payments aren't due until 2029. It's currently facing a ton of legal challenges. So We're 2 years away, legally uncertain, and it only applies to income over $1 million. What it is not, it's not a tax on real estate sales. Buying a home in Western Washington, selling a home, real estate is specifically exempt. This hasn't changed at all. It's not a general income tax on everyone relocating to Washington. So if you're reading that, that's not true. It only applies to the above 1 million annual household income, and it's not in effect yet. It's not taking place until January 2028 at the earliest. So who does it affect in the real estate context? Well, here's who it's going to affect. It affects those high-income tech workers and business owners who chose Washington state specifically to avoid that income tax. Now that changes for them. It's going to affect my landlords that I'm selling investment property to where they're earning over $1 million in rental income. That rental income is now included, and my luxury market where they're $4 million and above, it's already showing that movement. Here's what's actually happening on the ground in Western Washington right now. King County listings over 5 million jumped 40% compared to last year in the weeks after the bill passed. High net worth sellers are listing their primary estates, and some are reestablishing residency in Nevada, Florida, while potentially keeping a smaller condo here for lifestyle reasons. One Windermere economist flagged that increase of 4 million plus inventory, which could create this downward pricing pressure filtering into 3 million to 4 million range. For most people relocating to Western Washington, they're buying a home in Gig Harbor, Tacoma, Port Orchard, Kitsap County. The direct transaction impact is minimal to zero. But there's a strategic read here. For those motivated luxury sellers that are coming on the market, it's raising the inventory and it's creating opportunity for some other people to have this move up moment. Let me bring it back full circle. Here's exactly what all of this means for you, whether you're relocating to Washington state, buying your first home here, or selling to move here. Let me break this down by where you are in the process. If you're relocating to Washington state from another state, Washington, in my mind, is still one of the most tax favorable states you can move to. There's no general income tax. It's just on the ones that are making $1 million and over. Real estate sales are exempt from capital gains tax. Property taxes are moderate compared to California, New York, or Illinois. The value proposition for people moving to Western Washington from high coast states is largely intact, and it's still a better deal than most places your dollar could go. If you're selling a home to fund your move here, your Washington home sales proceeds are not subject to Washington's capital gains tax. That's whether you're selling a primary resident or an investment property or land. Now, if you're selling a home in California, Texas, or another state before moving to Western Washington, that sale also falls under federal exemption rules, not Washington's. If you're an out-of-state buyer purchasing in Western Washington, you need to understand Washington's real estate excise tax, REIT, which is the state's transfer tax on real estate sales. That hasn't changed. The capital gains tax doesn't hit you on a purchase. Estate planning becomes relevant once you've established here and you're building equity. The main tax exposure for buyers relocating to Gig Harbor or anywhere in the South Sound is REIT on the eventual sale, and that's years away for most. If you're an investor buying in Western Washington, real estate transactions remain exempt from capital gains. Rental income above $1 million will eventually be subject to that millionaire's tax, but that's 2028. And again, that's legally uncertain. We'll see what happens. The market movement at that luxury end is worth watching. There are some motivated sellers creating acquisition opportunities for investors who are ready and positioned. If you're a first-time buyer or moving up in this market, honestly, the noise around the millionaire's tax might be creating this window right now. Luxury sellers are more motivated. Higher end inventory is ticking up, and this could ripple down into that $800K to $2 million move up range. If you're moving to Washington state and timing matters to you, Pay attention to what's coming in the market in the next 90 days. Washington's tax environment is shifting. There is no question about that, but here's what I want you to walk away with. If you're moving to Washington State, relocating to Western Washington, or buying a home in Gig Harbor, Tacoma, or anywhere in the South Sound, real estate is still protected. The exemption is built into every piece of legislation we just talked about. The legislator kept it there on purpose. What is changing is the wealth environment in this state, and that creates a ripple effect in our market. My job is to help you read these ripples and make a move that makes sense for you, whether that's buying here, selling here, or figuring out if Western Washington is actually the right place to plant your roots. If you're considering a move to Washington State, reach out. Let's have a cup of coffee, have a real conversation about what your situation looks like, maybe what your taxes might be, timing, market conditions, the full picture. Subscribe if you haven't. Drop your questions below. I read them all. And grab my Washington State relocation guide in the description. It's free and it covers everything you need to know about moving here. Taxes, neighborhoods, cost of living, and what your money gets in Western Washington versus where you're coming from. I'm Leanne Hall, your go-to girl for all of Western Washington. I'll see you in my next video.